Hello, everybody. I'm Neil Hennessy and happen to be chairman of the board of Hennessy Advisors, which is the advisor to Hennessy Funds, of which I'm also the chief market strategist for Hennessy Funds. And quickly, I just wanted to give you my market views from where I sit from after 46 years in this business and try and bring you up to speed of why you should be calling your clients today. Not to sell them anything, not to give them anything, but to get them prepared for what most likely will happen. Doesn't necessarily mean it's going to happen, but it could. You could see a 40,000 Dow Jones. Now, let me put this in perspective here. If you go back to the late 90s, we had the dot-com arena. Today, we have the AI arena. Back in the 90s, you had the market going absolutely crazy. In fact, in 99, the NASDAQ goes up 86%, and it was all controlled by dot-com stocks. What are we seeing today? We're being controlled by the AI stocks. If you look at back a couple of years, we had the Mag 7 that were controlling everything. So what I'm trying to do is say, okay, what could happen? When I look back at 99 and I look at the significance of where the PEs were, say, in the Dow Jones at that particular time, it was about 29 to 30 times earnings. Today, we're looking at 21 times earnings. So it's not overvalued. But when I look at the S&P and the 10 largest stocks in the S&P, they're trading at, on average, 30 times earnings, well over or 50% higher than where the normal PE is for the market. Could we have a correction? I think you could have a correction. We've seen them before. But essentially, it's not going to be long. It's going to come and it's going to go. For instance, the last time we saw a 20% or more decline was in 2022, where the market was off 22%. But then it came back. So from peak to trough was 6 months. From peak to trough back was 10 months. So essentially, you're not going to have any time to get out and get back in. Interesting enough, if the market does come off 25%, worst case scenario, essentially, what are you looking at? Now you're looking at a PE of 16 on average, well before the last 10 years on the average PEs in the Dow Jones. But what happens? The money's not going to go from the market. It's just going to go from one sector to another sector. So, for instance, if you look at Silicon Valley Bank a year and a half ago, why'd they go broke in a couple hours? It was very simple. People could look on their watch and transfer their money from Silicon Valley Bank over to Wells Fargo. Well, the same thing can happen now. You can actually move your money very quick. You can be out of the AI stocks and into, say, the industrials or consumer staples or wherever in a heartbeat. There is so much cash on the sidelines, too. There's approximately $19 trillion sitting in bank deposits, of which about $4 trillion is sitting in non-interest-bearing checking accounts. Plenty of cash on the sidelines, plenty of cash in the market. But when you start to look at AI, this has been around. This isn't a new idea, and that's the scary part. Because if you look at artificial intelligence and then you look at what it did with algorithms, that's where you could have a sharp upside or downside. This time, it could be on the downside. And once you get those algorithms going one way or another, and it comes down and hits a point, another cell program comes in, another cell program comes in, another cell program comes in. Your clients are phoning you saying, oh, what do I do? And you're trying to calm them down. The reality of the situation, you don't have to calm them down from the standpoint if you're in front of them and you call them first and you say, hey, look, this could happen. Don't worry about it because history tends to repeat itself. And they've all come down and gone back very quickly. The market today is not overvalued. In fact, if you added dividends in to the Dow Jones would be selling about 135,000. So you don't want a correction to make a long-term decision to affect what's going to be for some of your clients that are retiring. So my advice here is the market's in very good shape. The economy is in good shape. Yeah, we have some hiccups or whatever. The main hiccup is going to be a market correction, and it's only a correction. It's not a long-term systematic problem. with the economy or the industry. With that said, if you guys have any questions, call any of us at Hennessy Funds. You can talk to any of the portfolio managers or myself or whomever. And thank you for listening.